Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to Quorra, where we dive into the world of finance and explore the stories behind the numbers. Today, we're taking a closer look at 3 high-yielding dividend stocks in the S&P 500 that might just be worth considering, but only if you're willing to take on some significant risks. We've got United Parcel Service, Conagra Brands, and LyondellBasell Industries, 3 companies that are making headlines for all the wrong reasons. But before we get into the nitty-gritty, it's worth noting that these stocks have one thing in common. They're all part of the S&P 500, and they're all packing a yield north of 7.5%. That's right, folks, these are some of the highest-paying dividend stocks out there. But before we get too excited, let's talk about the risks involved. As enticing as it may seem to find high-yielding investments in the S&P 500, the reality is that these companies are facing significant headwinds. Revenue has been declining for UPS, Conagra Brands is struggling with flat organic sales growth, and LyondellBasell Industries is seeing its profitability contract sharply. Let's take a closer look at UPS. For years, this company was on top of the world literally. With the pandemic fueling e-commerce growth, UPS became an essential partner for retailers and consumers alike. But since then, things have changed dramatically. Tariffs and waning consumer confidence have stymied demand, and the company's relationship with Amazon has soured. In fact, UPS and Amazon used to be like peanut butter and jelly. They just worked together seamlessly. But now, Amazon is expanding its partnerships with other shippers and building out its own last-mile fleet, leaving UPS struggling to keep up. And let's not forget the seismic shift in their relationship, which has led to a deal that locks in rising labor costs through at least the next 3 years. So what does this mean for investors? Well, for now, it seems like UPS will continue to struggle. Revenue declines will accelerate in the second half of this year, and profitability will fall even harder. Wall Street pros are seeing flat revenue on improving profitability next year, but that's still a far cry from the good old days. Moving on to Conagra Brands, we're looking at another struggling company. With a portfolio that includes Hunt's tomato sauce, Pam cooking spray, and Hebrew National hot dogs, you might think consumer staples would be an all-weather niche. But not this time. Revenue has declined in back-to-back fiscal years, and analysts have slashed their price targets on the stock after falling short on both ends of its income statement. And if that's not enough, Conagra Brands' payout ratio is a whopping 79%. That means it's already paying out more than half of its net income as dividends, not exactly sustainable. But here's the thing. If this company can start to beef up its margins, it might just be able to turn things around. And then there's LyondellBasell Industries. Now, I know what you're thinking, a chemical stock. How exciting can that be? Well, let me tell you, this company is not exactly in a good spot. Its profitability has been contracted sharply for the 4th year in a row, and it's currently unable to cover its distributions out of reported earnings. But here's the thing, being a high-yielding dividend stock is no guarantee of success. In fact, Dow Inc., another S&P 500 heavyweight, was on top of this list until recently when it cut its juicy dividend in half. If LyondellBasell Industries isn't on this list in a few months, you shouldn't be surprised. So what's the takeaway here? While these high-yielding dividend stocks might seem appealing at first glance, they're not without their risks. Each of these companies is facing significant challenges that could impact their ability to pay out dividends in the future. So, if you're considering investing in any of these stocks, make sure you've got a solid understanding of the risks involved. Thanks for watching, Quorra. We'll see you next time.